Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
This is the most vicious stock picking show on TV. Welcome to Share Shootout here on CNBC Africa, first in business worldwide. So why do they call a boxing square a ring? Why do South Africans call traffic lights robots? And is Chuck Norris really the best player Super Rugby will never know? We don't know the answers to those questions, but what we do know is that we're ready to rumble. We got Smashing Sasha and Raging Roger taking each other on in the latest edition of Share Shootout. Let's introduce the challenger. Roger, if you'll come towards me, please. Fresh meat on the butcher's block, that is Share Shootout. Roger Williams from Centaur Asset Management, who is on his first appearance. He's up against the defending champion with 4 appearances, 2 wins and 2 losses, Sasha Naryshkine from Vestact. I'm Bruce Whitfield, and over the next 30 minutes, I will listen, judge and decide who will stay and who will get shot down. Both of our guests have pre-picked 3 shares. They're keeping them close to their chests because neither knows what the other holds, but at some point during proceedings, they must accept at least one of their competitor stocks. The longer they leave it, the more likely they are to have to accept something they really don't like. Each has got 30 seconds to argue their stock pick. We then interrogate their choice. We then abuse them, and that's the way the game works. If you're a regular, you know exactly how it works. Because it's Roger's first day, Sasha, do we make him go first, or would you be, for a change, a gentleman and take the first
For
fall?
a change, a gentleman.
You'll be a change, for a change, a gentleman. So your 30 seconds then, to give us a sense as to how it works.
Yes.
30 seconds as to why you would choose mixed telematics of the 500 shares on the JSE. 30 seconds starts now.
Well, first and foremost, it's narrowed down. But this mixed telematics business is moving towards more a annuity income business, fleet management. They're expanding their international operations pretty aggressively. The Beat Me initiative has captured a lot of the market here and taken away market share from some of the leaders. And in essence, really dynamic young team who are running a great small business, and it's grown really competitively.
30 seconds are up.
I didn't hear the boom.
What do they actually do?
Mixed telematics. It's fleet management mostly, and of course of your motor vehicle, but all sorts of interesting adaptations of that too.
But the technology that goes into the...
It's basically a technology company.
Okay. All right. Roger, do you like tech companies?
Generally not, but mixed telematics does have some positive elements to it.
What do you like?
I think they've done very well compared to their competitors. Their cash flow is very good. They have internationalized the company, so it's about 50% global, and with the weaker rand, that's going to assist them. What I don't like about it is that locally it seems to be ex-growth.
Okay.
Their matrix business is not really growing at all.
So these guys, the tracking devices in your cars,
Yes.
the matrix tracking systems, that sort of stuff. Locally, ex-growth, Sasha, defend it.
Beat Me. So it's a new product that they've got that's been taking market share. It's cheaper and it's removable from the vehicle.
Isn't that a problem?
Well, that is, yeah. But you can
look,
hide
we
it.
just hijacked your vehicle. There's your Beat
But
Me,
you
chuck it
can
in the felt.
hide it in many different places, so it isn't cropping up in the same old place. So I quite like that initiative. Roger's right. Here we're playing in a much smaller market. They're taking all the lessons they've learned here. If they crack the US, it could potentially be huge.
Okay, could potentially be huge. But is it potentially huge enough for you, Roger, to at this stage, this early in the game, commit to, yes, I can accept that, or do you shoot it down?
This is a difficult decision because I don't know what the next 2 stocks are.
You see, that's why this is such a fun game.
I would accept it.
You'll be relieved, actually, I think.
Why?
Because the next 2 are dogs. Well, no, the next 2 have run quite hard in the last while, but you'll find out what they are now. So, because he's new to the game, he's being cautious and he's accepting your first pick. It doesn't mean it's any good. But Mixed Telematics, it's a 2 billion rand company. It's got huge growth potential. South Africa, a little bit overtraded right now, but looking to break into the US. Who did that? Oh, yes, Sage, Old Mutual, Discovery, all of those guys. Did they also try that?
Hopefully Discovery back there, Bruce.
Well, they've got Destiny Health there, which they sell the health plan to all sorts of other life insurers because they couldn't crack that market. All right, Sasha, so your Mixed Telematics pick gets the big thumbs up. Let's try you, Roger. In 30 seconds, I need to know why you are such a huge fan of Reinet. 30 seconds start now.
Reinet is an offshore company and wants some offshore exposure. It's trading at about a 25 to 30% discount to its add-up value. And really it's run by and controlled by Johan Rupert,
who's on holiday. Sorry, I'm interrupting. Carry on.
But I mean, he has really been a fantastic businessman, creating immense shareholder value. And really, I think at a 25% discount, I would back him.
Okay. Now, what are the assets? The clock's still ticking, but it's your first day, so we'll
British American Tobacco is their major asset.
But they're selling it down.
diversifying.
They're selling it down, aren't they?
Absolutely. So what they're doing is the major holdings British American Tobacco. Over time, they're looking for shares which will exceed the hurdle rate, and then they're diversifying into other shares. They also have some leverage, which levers up the returns. Another very good aspect, it's domiciled in Luxembourg, so you don't pay capital gains, and that's also very positive. But I really like the Rand hedge exposure, and the discount to the NAV is a major attraction.
I've got a feeling that he's going to like it. Sasha, Reinet?
No.
Excellent.
I'll tell you the main reason why I don't like it is because the defensive attributes that British American Tobacco, which is their core holding, over 80% of the fund is essentially British American Tobacco. The defensive attributes of that were all very well in a world where everyone was uncertain, but I think that stock essentially is overvalued. The other thing I don't like is the fee structure. Jeez,
yes.
I mean, the shareholders...
There's a reason why Johan Rupert can take a year off. He's creaming fees out of Reinet.
Yeah, I do think that the shareholders get a bit of a raw deal. The fee structure is huge. But if they do well, then I guess maybe it's warranted. I don't know. But personally, I don't like it. So those two things, and they've got to wind that back stake down to under 25%, is that right, Roger? By a certain date, but they extended it, they rolled it.
Yes.
I think it's like 2016 or 2017, they gave themselves
a
little
that's not
bit
a hard
more
and
breathing
fast rule
space.
because they can extend it. So really, it doesn't really mean much.
But Roger, what about the fee structures? Because the fee structure is something
agree.
that keeps a lot of people out. Because it's something like 10% of profit, isn't it? It's something, it's big.
Yeah, the fee structure is high. It's 1% and then 15% on outperformance.
Okay, that's right.
Which I would say would on average take off about 1.5% per annum of the market value. But what you're saying is you're backing management really to enhance value by 1.5%. And I think if you look at the track record, they've done that in Remgro and Richemont and other counters. And I think one can give them the benefit of the doubt. You're buying it at a 25 to 30% discount to its add-up value, so you're not paying for that. You're already, I think a fair discount would be 15%. And I think over time they can validate that fee structure through outperformance.
All right, so you like the fee structure, you're willing to pay it. It's a little bit like saying, I'm going to go for a unit trust, I've got a fund manager to actively manage my unit trust, as opposed to going into a Satrix direct investment where there is no management. I'm prepared to pay a management fee because I trust the expertise of the individuals involved.
Absolutely.
Okay, so that is the approach that Roger's taking, but you're going to shoot it down, Sasha, because you're obstinate.
Not necessarily. The underlying assets to me are overvalued in my world.
Well, but would you accept the management fee? The management fee is something you raised, but you're not comfortable with it.
Not comfortable with it. Seems too high.
But if management adds the value,
then
it's easy. Then
and
pay
to
the
be
money.
fair to management, by having done nothing, by having not sold BAT, they've done an excellent job.
Yeah.
Because at the beginning you could have said, why are you guys just doing nothing? Well, here's why they did nothing, because they thought that BAT, and the fact that they've signaled that they're selling, maybe that, sits quite well with me, because I believe that BAT's overvalued. But, that aside, I don't like the management fee. I don't like where it is right now.
All right, so you're shooting it down.
Yeah.
Okay, there we go. So you've been shot down with the first one. It hurts, doesn't it, on your first try to have somebody as vicious and nasty doing that to you? But
I'm heartbroken.
You'll understand the pain that comes through share shootout. Right, so Sasha, he's not going to be as nice as he was the first time round because you're going into intensive care. In 30 seconds, you need to explain to us why a diversified health play from South Africa, which is sitting with huge problems with an acquisition it made nearly 10 years ago in the UK, is even vaguely favourable to you. Netcare, 30 seconds.
Why are you saying huge problems? Is because they've got massive debt that they need to roll by October. Now, in the recent results just a couple of days ago, they've indicated, yes, they're going to do this. I think the guy who runs the business, Richard Freeland, is probably one of the most intelligent South Africans ever to be produced amongst this fine nation. So I think in terms of management, They've got a fantastic team. And I think healthcare as a theme globally is just going to carry on getting more and more momentum.
All right, there we go. Do you like Netcare, Roger? Yeah, well, firstly, is
not
Richard Friedland
particularly.
one of the greatest South Africans ever born? Secondly, do you like Netcare?
I wouldn't like to comment. I think the most important thing is they just released results. The results were credible. So on a 21 historic PE on your numbers. And how much growth did it produce in South Africa? Organic turnover growth, I think it was of the order of 7 or 8%.
Exactly.
Are we paying a 21 PE for an 8% headline growth company? Listen, that doesn't excite me.
I think the big difference here, Roger, is where when they resolve those debt issues, as Mediclinic did, you'll see a re-rating of the stock.
How long does it take to resolve the debt issues?
Well, they're going to do it by October.
Okay.
So,
But will they do it by October?
They
or
will
they
do it by October.
Okay.
I think they're working hard enough to be able to.
But GHG's been a complete lemon. I mean, that is a disaster acquisition. I don't think you can compare it to Mediclinic because their acquisition has worked out. The profits have gone up. GHG, the margins have gone down. And really, it hasn't worked out. Their property portfolio, they couldn't offload it. And, I think it's management really made a bad call on that acquisition. And really, the company has lagged over the last couple of years compared to its peers. And I don't think the pedigree's there. They really haven't proven to me that I'm willing to pay a 21 PE for a company with a very patchy track record.
You see, he's getting it.
Yeah,
he's getting the game. He's getting the
so
game.
Mean.
Okay.
Bruce, can I come back at that? Because I think where a private healthcare is going to fill an enormous gap, because I think funding from governments is under pressure. It's under extreme pressure. So I think
In South Africa.
Well, globally. So I think even in the UK, I mean, there's 60,000 people in the UK who go abroad for medical attention. And this is private medical attention every single year. So there's another 60,000 potential
But that's enhancement
customers.
medication, and it's more cosmetic than
Listen,
it
I think
is
you're
real.
speaking to your book because the reality is
We all speak to our book.
the UK, the government has been putting
Yeah.
people on the books of
It has.
GHG, General Health, but at reduced margins. So the turnover is going up, but the margin's going down. And what we really need is we're looking at bottom line growth. And the growth is not manifesting. And a 21 PE, wishing on a prayer, I mean, locally, the growth slowed down to nothing. I mean, 8% inflation, 2% real growth. And the downturn hasn't even started in South Africa. I mean, are you willing to pay that kind of multiple? Cash flow is not good. I mean, really, British American tobacco you don't like on a 15p and a 5% yield, great track record, but you like Netcare on a 21.
Because I think healthcare is a far more important theme than tobacco. So buying today, in essence, in what is, I think, over the next decade, a big growth business.
Yes.
You know what I mean? If you've seen the numbers in the South African context, this business didn't exist 20 years ago.
It did,
But not in its
Clinic
current format.
Holdings, and had a patchy track record back then.
Well, in its current format since 1994.
Okay, children. This is a lovely fight to have. The point is, you can protest until you're blue in the face.
He
British
doesn't
American
like it.
Tobacco is the supply chain for Netcare. You don't like British American Tobacco. He doesn't like your Netcare. So therefore, you're shooting it down, Roger. A compelling argument for the new
Down.
Street Fighter. Down, absolutely.
Down.
Netcare goes in a ball of flame. So, Sasha, he's got the game.
Roger's clever.
Okay, Roger's got the game. So tell us why you like RMI, because of course there was RMB, which is Rand Merchant Bank, and then they put the banking business when the founders sold out of First Rand. They put the banking business into RMB, into the banking business, and then Rand Merchant Insurance is where they tie up all the insurance businesses, including a very delicious stake in Discovery Health. 30 seconds as to why you like RMI.
Well, the founders have an exceptional pedigree of creating value for shareholders. Since they last listed Rand Merchant Bank many years ago, they've just created shareholder wealth. And I see Rand Merchant Insurance really a manifestation of this. If you look at OUTsurance, it's grown top line at over 10 times over the last decade and is continuing. Discovery also exceptional business, also growth. I'm really backing management to continue growth. And I think it's
I see a theme coming through here. You like strong management teams, you like people who have founded businesses, and you like the fact that they stick around in those businesses in one form or another in order to continue developing that legacy.
Absolutely.
All right, there we go, Sasha. RMI, how can you not like it?
I do like it. I must be honest, for all those reasons. You know, when we're picking businesses as stock pickers, you do look for big management stakes and kind of continuity. You know, I would say the only negative is after all this reorganization, you say to yourself, well, you know, South Africa is a pretty saturated market. And that is true, but we're all underinsured.
Yes.
That is also very true. And there are a lot of people in the South African context who can fall into the net over the coming years. You know, with middle class wealth creation, one of the luxuries is, of course, insurance.
Okay, so insurance is still seen as a luxury in South Africa. However, when you look at the number of cars driving on the road that don't have insurance, the number of people who don't have any kind of disability cover or even life cover in the South African market, it's a great opportunity, but it's got to be sold to the South African market. Now, do we in the next 10 years have that capacity to convince people that this stuff is important?
I think so, because as you build household wealth, that's when you've got to protect it. That's when you realize, you know, if my income is hurt, and that's what you're starting to see, household wealth formation in a South African context with a much bigger burgeoning middle class. So the short answer is yes, I think it's still a growth.
I think he likes it, Roger. You've rattled his cage, you've rocked his boat, and you're accepting it.
Yes, I'm accepting that.
All right, then there's no need to come back to you, Roger, on that particular one. Let's take a short break, because the gloves are off on the other side of this. There's a lot to fight for. Roger Williams from Centaur, he has chosen Reinet. He likes Reinet, he likes the management philosophy, he likes the way in which the business is run. However, for Sasha, Reinet has simply got too much of a cost base to it, and despite the fact that there's a nice big discount within that Reinet structure, he doesn't like to pay management anything more than they deserve in terms of a salary packet. Rand Merchant Insurance, however, RMI, where the insurance businesses of the First Rand Group have been housed, that, however, gets the big thumbs up from Sasha. Sasha's mixed telematics got the thumbs up from Roger. Then Roger got the gees of the game. He got the spirit of the game, and he has schooled Sasha like Sasha's not been schooled in a long time. You want to choose Netcare, Sasha? Maybe next time you'll think more carefully. Well, hopefully, we'll give Sasha a chance to change his last pick if he's feeling chicken. We'll take a short break. Gloves are off on the other side of this.